So welcome to our webinar. So we are talking about the one-stop shop today. So the July 2021 changes. I'm sure a lot of you have heard of all the changes coming into place. And here at AVASK, we want to make it as easy and as simple for our clients as possible. So this is our second round of webinars actually to provide our clients and the people that are selling in Europe as much information as possible as the VAT changes come into place. So my name is Alexandra Robson. I know a few of you in the webinar already know me, or I manage your account, or we've spoken previously. I am an EU VAT consultant and senior team leader at AVASK, and I will let Cambridge also introduce herself.
Hello, my name is Cambridge. I'm also an EU VAT consultant and team leader here at AVASK. Hopefully some of my clients have tuned in today, or if not, I should have reached out to some of you from past webinars, so it's nice to see you all here today. Thank you for joining us. Perfect. So if we just start kind of from the beginning, as we kind of alluded to in kind of the little preamble we had a moment ago, that this year has gone incredibly fast in terms of the VAT world. There's been a lot of change and a lot of, I suppose some people would consider it turbulence in terms of how we're going to deal with VAT going forward. So from the very beginning of the year, it makes sense to start chronologically. Obviously, from the 1st of January 2021, it's a word that hopefully we can start kind of taking out of our vocabulary, but Brexit did happen. The UK stopped being part of the EU single market, and it ceased to be a member state of the EU, which did mean that the free movements of goods between the UK and Europe stopped. That obviously interrupted a lot of people's traditional fulfillment methods, bringing stock into the UK, shipping it through to the EU, and vice versa for our EU friends amongst us today. It made it slightly more difficult to get goods into the UK because of the new customs borders that were introduced between the UK and EU, and import duties were introduced. But so it does mean that kind of we have seen that change, and now the changes in Europe are coming in as a kind of reflection on that. So the UK is now classified as a third country in regards to the EU, and therefore some of the changes that we'll speak on later will affect UK incorporated businesses more so than we had previously considered once all the changes were being discussed. So if I just skip through. So yes, the end of free movement goes between EU and UK, 0% customs duties and import tariff between EU and UK goods. So if your goods are of UK origin or of EU origin, there is a trade deal that did come in very last minute to ensure that there wasn't too much disparity between the UK and EU, obviously because of the traditional alliance that was between the two. But it has meant that there are new customs borders, which does mean that people that are importing into both jurisdictions do need to take some extra steps, such as UK and EU EORI number in order to get goods into the UK and Europe, instead of having one universal EORI number, which traditionally for a lot of our clients, I'm sure I will speak for a lot of Alex's portfolio as well, was traditionally a UK EORI number. So those are things that we were kind of discussing at the start of the year and the back end of last year that needed to be taken into consideration, and the changes are now being reflected elsewhere as well. So if I pass over to Alex, she can just give a brief overview.
Perfect. Thank you, Cambridge. So yes, as Cambridge mentioned, there were a lot of changes that came into place with Brexit, which affected the UK trade and the UK to EU trade. And as we move into July 2021, we're going to see more changes come into place. But the main changes we saw as a result of Brexit was that requirement to have an EU VAT number and an EU EORI number, as well as holding them in the UK as well. So the UK and the EU market separated. So a lot of sellers were using a UK EORI number to move those goods around Europe. A lot of sellers would sort of use the UK as their gateway to Europe and would have Amazon disperse their stock around. But that split has now happened, where people need to ship their goods into the UK as well do it into the EU. So that requirement to have an EU VAT number, EU EORI number, as well as a UK VAT and a UK EORI number are one of the most important things as a result of Brexit. Furthermore, there are now customs declarations for import and export, as well as maybe further VAT declarations that you didn't need before have come into place. Obviously, with the customs border between the UK and the EU now, we have seen a lot of sellers having difficulties getting their products into Germany, the borders, or France borders, and we have seen those sellers come to AVASK, and we've been able to help provide solutions. So that strengthened customs border has been a new requirement that's come through since Brexit, as well as the requirement to have indirect or direct representation for those non-EU businesses in particular. So the requirement to have a representative in the EU help facilitate and clear your shipment into the EU became paramount as a result of Brexit. At AVASK, we offer assistance with all of these services. So we have a customs and trade team. So if you reach out to your VAT advisor, they'll be able to reach out to the customs and trade team to help you facilitating those orders to the EU and those shipments. So what are the main changes as a result of July 2021? So this is the main topic of our webinar today. So we can help everyone get prepared, ready for these July 2021 changes. So the main and primary one is the extension of the VAT mini one-stop shop to all B2C businesses. So it's now converted to the one-stop shop, which is what we will highlight mainly throughout this webinar. Abolishment of distance selling thresholds. There is now only a €10,000 threshold, which is only applicable to EU businesses. I must emphasise that is not applicable to any non-EU businesses to use the one-stop shop. B2C businesses may not be required to register for multiple VAT numbers anymore, subject to their business model. One thing myself and Cambridge will be emphasising a lot throughout this webinar is how versatile the one-stop shop is and how applicable it is to you as a business, because your business model will depend entirely on your VAT obligations. It is now not a sort of a standard rule for everyone. It is depending completely on where you're trading, where are your goods coming from, where are they going to what requirements you will need in Europe. So having that dedicated VAT advisor in Europe is so important now more than ever to make sure everything is done correctly and smoothly. Abolishment of VAT exemption for importation of low-value items. So there's a new scheme for those imports that are coming through. So if you are sending goods maybe through MFN and you're sending goods from outside of the EU into the EU, there is now a new scheme for that as well. And OMP collect and remit for non-EU companies. For those businesses that are selling in the UK who are not UK established, you should have experienced this already within the first half of 2021, as this was brought out in the UK as a result of Brexit. So you should already have seen this a lot throughout your UK sales to be able to recognise that transition within the EU. Likewise, if you're selling on .com, this has been introduced in the US in the last couple of years with the marketplace facilitator states. So Amazon and all those sorts of online marketplaces are really now becoming responsible for the collecting and remitting of VAT across different states, different countries and Europe. So these are the main changes we're going to be going through today. So I'm going to hand you back to Cambridge, who is going to start with OMPs.
Perfect. So you probably already realise there's a lot of abbreviations that are going to be used in regards to the changes here. So let's start with what is an OMP. So it's an online marketplace is the extension abbreviation. So it's any electronic interface that facilitates the sale of goods to an end consumer. So obviously for the vast majority of our clients here today, it's most likely that their main revenue stream for their e-commerce sales is Amazon, obviously then followed by eBay. And a platform is considered an OMP when it meets all the conditions below. So it sets the general terms and conditions, authorises the charge of payment, and is involved in ordering and delivering of the goods. So what we have to define here is the importance of the OMP, and is the platform that you're selling on the OMP. As Alex said, the whole kind of scenario that we have based today is that a lot of clients are selling online through various different marketplaces, which means that some may be deemed an OMP and some may be not deemed an OMP. So for our non-EU incorporated individuals, it's really important to identify which platforms will be collecting and remitting on your behalf. So it's really important to identify the difference between the two. So your Amazons and your eBays of the world will collect and remit on your behalf if you are a non-EU incorporated business. But platforms such as your own websites and Shopify, this is when we're going to have to take the additional actions to register you for OSS or IOSS, subject to your business model, to ensure that you are compliant moving forward from the 1st of July. If you have any questions on regards to if the platforms you are selling on are an OMP or not, please do reach out to your dedicated tax advisor. They will be able to advise you on your OMP's obligations or your website's obligations. Vice versa, if you are selling in the EU, the OMP will not be, if you are registered in the EU, incorporated, should I say, the OMP will not be liable to collect and remit. So, but it's also a good thing to keep in mind what the conditions are. So as I alluded to, the role of the OMP is changing. Obviously, previously it didn't have such an obligation in Europe, and it has had the obligation brought in the UK as a result of Brexit. So the OMP will be the deemed supplier. So they will be making the sale on your behalf. You would have transacted with the OMP, and then the end consumer will be dealing with the OMP. So this will apply in the case of consignments of goods with an intrinsic value not exceeding 150 euros supplied and imported to the customer in the EU, so that is IOSS, and sales of goods already imported and circulating in the EU, supplied to a customer in the EU by a seller based outside of the EU. And I realise that sentence has a lot of EU in it. Probably should have worded that a tiny bit better. But yeah, that is irrespective of the goods value. So those are the two systems, you know, IOSS and OSS. So the obligation of the OMP remains across both systems if you are selling on the OMP and you are non-EU company.
Perfect. So it'd be helpful if we can roll through one OSS example for you guys. We're going to sort of touch on three of the most standard conversations we would see with sellers, so non-EU companies, EU companies, the use of OMPs and the use of non-OMPs, so we can try and cover as large a variety of yourselves as sellers as possible. So the first example we're going to go through is a non-EU company. So if we take yourself as a US company, this could be US, UK, Chinese, any such company based outside of Europe, making sales only via Amazon Pan EU. So Amazon is considered an OMP. Company is based outside the EU and only makes sales via an OMP. As it's a non-EU company, the OMP is responsible for the collection and remission of VAT on the sales of this company. There is no OSS requirement in this scenario. So if this is your business model, please sort of really keep an eye on this slide, because this is going to tell you exactly what you need to do. You have no OSS requirement at all. The US company must keep numbers where any stock is held. So if you've got Amazon Pan EU on, you probably have stock in those 7 countries. That case, those VAT numbers still need to be held and you still need to have VAT filings. However, you don't need to register for the further OSS VAT filing and compliance. Due to OMP collection, your sales are seen to be made by the US company to Amazon. Where Amazon now the deemed supplier, you will essentially see the sale in 2 transactions. You have yourself making the sale to Amazon, and Amazon making the sale to the customer. That's why the OSS obligation within this case falls into Amazon rather than yourselves, where they are making that distance sale. So if we look at this example here, so a US seller is using the Pan EU program, making a sale at Amazon, fulfilled from Poland, delivered to Germany. The seller declares a sale to Amazon on their Polish VAT return with 0% VAT, because it's a 0% sale from yourself to Amazon. Amazon will declare the sale on their OSS returns. It's Amazon's obligation made from Poland, where they bought the good from you, but still in Poland, to Germany. So that's how you can see that sales now split into two halves. So in this scenario, the US seller is only required to keep their VAT numbers where stock is held and continue filing appropriately. So you will see your VAT return starting to look a lot more different, because the VAT sort of element of the VAT return will now be 0%. So your VAT is being collected and remitted on your sales as they go, as opposed to paying it in one lump sum at the end of the month or the end of the quarter, end of the year, depending on your filing stagger. So this is a very, I'd say, large base of the clients I'm seeing sort of falling into this particular category. Having a dedicated tax advisor is still so important. Due to the changes that are coming through, we're going to see increased auditing, increased regulations. Once again, OSS is only applicable to B2C, so B2B need to be handled in a different manner. If you start operating on your own website, that then changes this scenario. So it's really important to keep that stream of information going with a dedicated tax advisor, so you're always at the correct stage with your VAT filings. So I'm sure this will be a large amount of sellers on this PowerPoint today falling into that category. So and then, oh, sorry, Cambridge, carry on.
No, I just wanted to add in there that it is really important. I know a lot of online platforms as well are sending out a lot of circular emails to, make sure that your information that sellers have uploaded to that is completely, up to date. So do make sure that you are keeping on track with all of those.
Perfect, definitely. So going into the second scenario for a non-EU company. So again, we've gone with the US example in this instance, but it might be Chinese, it might be UK, anywhere outside of Europe in this case, making sales via Amazon Pan EU. So much like the last slide, if that was the case, the last slide regulations would apply. But in this case, they have their own website sales to EU customers. So that is what's changing this particular example's OSS requirements. The company is based outside of the EU and makes sales via an OMP and on its own website. The OMP is responsible for the collection and remission of VAT due to it being via an OMP. However, distant sales made external to an OMP, so in this instance, the website sales, will be the seller's responsibility. VAT will be needed to charged as per the delivery country, and these sales will need to be declared on an OSS return. Something that's really important to recognise within OSS is these changes are coming into place because, subject to EU law, VAT will now be charged on the arrival country as opposed to the departure country, which is why OSS has been formatted. If you were making distant sales and the OSS hadn't been introduced, it would mean companies would have to register in every single country they were making distant sales to. So if you had a website making website sales to European customers all day, every day, you could be having 26, 27 VAT registrations, which obviously is a lot more administration that I bear to think about for sellers. When you just want to sell, you don't want to have to worry about filing 26 VAT returns. So the EU brought through the OSS so that all distance sales you make could be declared in one VAT return, so that they were saying, these are the changes, but don't worry, we've got your back. You can put them all in one VAT return. And that's why these changes have come into play. So with the Amazon Pan EU sales, they will be handled exactly the same as per the last slide. You have all your stock and have VAT numbers where your stock was held. Due to the website sales, they will need OSS. As it's a non-European company, you can nominate your country of identification for OSS, and it should be where your goods are dispatched from. If you're an American entity shipping into Germany, your OSS country should be Germany for nomination. So keep an eye on where you're shipping your goods into. If you're shipping into multiple, choose the country that works best for you. What tax office do you find to be really helpful? Which tax office can you communicate with? And things like that to find the best solution for you guys. So when it comes to filing, the seller will be in a hybrid situation in this case. Some of their sales will be OMP responsible and declared at that 0% VAT rate as per the previous example, and the website sales will be declared on the OSS return because they are all distant sales. If their website sales are all in Germany and they've got website sales going from Germany to Germany, they will be declared in that local German VAT return. For anything that's going from Germany to France or Germany to Italy, etc., from the website sales are distant sales and therefore will go on the OSS return. So just to finish this example, that's how you can sort of see that breakdown there. So your nominated OSS country is Germany, hold stock in Germany, France and Poland, and then you'll see where those sales have to declare. So domestic sales in Germany, France and Poland will be declared on the domestic returns for each country. Sales fulfilled to different countries from anywhere in Europe to a different country will go in the OSS return filed with the German tax office. Because they've selected the OSS country as Germany, it is then the German tax office's obligation to split those funds out to the other countries. So your OSS return will show your German OSS, and it will show Italy, it will show France, and that's how they will know how much money needs to be remitted to the Italian government, how much money needs to be remitted to the French government based on where the sales arrive from. So everything will be on arrival VAT now. So in conclusion, for this example, the US seller is required to keep their VAT numbers where stock is held and to continue filing appropriately and register for OSS due to those website sales they are making.
Perfect. So now we're moved kind of into a European situation. So for our EU incorporated clients that are here today. So we have an example here of a German company making sales via Amazon, PanEU and own website. Obviously, we've discussed at length that Amazon will not be responsible for collection and remittance for an EU-based company. So we have two kind of distinctions here, your local sales and your distant sales. You will obviously still be obliged to hold your VAT numbers where you have stock held. That area of law will not change. However, it just depends on where you are declaring your sales. So all domestic sales, which are sales within a country, will still be filed in your local return. And as Alex said, that's the same for a non-EU company as well. So they'll be declared in your local VAT returns. And the difference here we have is that your distant sales, so your sales that cross a border, B2C, will be declared in an OSS return. So your EU incorporated company will have to register for OSS in their state of incorporation. Unfortunately, unlike a non-EU company, you cannot elect your state. You have to have it as your country of incorporation. So Italian companies will have to declare OSS in Italy. An example here, German companies will have to declare their OSS in Germany. That is, again, not optional. And therefore, all of your cross-border B2C distant sales will be declared then in your incorporation country, in your OSS return. And as Alex said, it is then the responsibility of that country to disperse the funds as per your filing, which will show your sales going to each jurisdiction, and the VAT due on those transactions will be dispersed to each of those jurisdictions. And that will be on, you will make a payment to that tax office, as opposed to obviously Amazon doing it on your behalf for your non-EU incorporated friends, and then that money will be dispersed. So that is where the kind of difference lies. It is mainly to do with the OMP's responsibility, and therefore the sales that are involved in both VAT returns will remain the same for EU and non-EU. It just depends on who is actually sending the funds. So for a lot of our non-EU incorporated companies, obviously it takes out a hell of a lot of administration. You don't have to start sending funds to different countries. I know that's a sticking point for quite a lot of clients, especially when, you know, at the end of the month you get several emails saying you have to pay gosh knows how many different countries at this point because you've breached various distance selling thresholds, etc. So that really is going to narrow it down. And the same for our EU incorporated clients. You know, you're making essentially more one mass payment, and then some smaller ones depending on your business model. So hopefully what we've demonstrated here is the two differences and how all of your sales will still be declared, and hopefully it's given you some kind of idea that it is actually streamlining. It's not necessarily simplification, but it definitely is streamlining how sales are going to be declared. And obviously it does give the tax office more visibility on what's going on, to ensure that obviously the VAT gap, which is obviously in the back of the tax office's mind, is kind of closed in, to ensure that everyone is compliant with their obligations.
Perfect. So we've covered one-stop shop quite a bit. So one-stop shop are those distant sales between the EU and to another EU member state. So that's what OSS is covering. And there is another scheme being brought into place in July called IOS. So keeping it simple, just adding an I up front, so it's not too much to remember, hopefully. But this is the import one-stop shop. So if, like I mentioned earlier, you are maybe doing MFN, you're doing your resident sales from outside of the EU into the EU, this is the category you will fall under. So any imports from third countries into the EU will be declared in an IRS return as per your country of identification. So an example, a seller holds stock in the US and makes sales from the US warehouse to a customer in the EU. Order values are always under 150 euros. If imports are over the value of 150 euros, the usual importing procedure will apply, and subject to the business model, a local sale will be made. So in this instance, all sales are under 150 euros. The seller is registered for IOS in France, and import VAT is not chargeable at the border upon entry into the EU. VAT must instead now be charged to the end consumer according to the VAT rate of the destination country. So if a good is going from the US to France, it would be 20% VAT on that sale. If it's under 150 euros, the sale will be declared in the IOS return in France. So if you are a business, say in the US, and you are selling just on your own website to all those consumers based all over Europe, as per the new rules where everything has to be declared per arrival country, you could find yourself again registering in 26, 27 member states, which no one wants to be doing. So the European Tax Office have brought through the IOS so that you can still sell into Europe with that one registration, if this is your only business model. Obviously, you could be doing IOS alongside PAN-EU, alongside OSS. And this is why myself and Cambridge are emphasising so much that it is completely dependent on your business model, the July 2021 changes. It's where are your goods? What websites are you selling on? Where are you incorporated? So having a tax advisor is so important. So if anyone at the end of this presentation has any queries at all, please reach out to us, because we'd be more than happy to go through any queries you have. So in this scenario, all of their sales will be declared on this IOSS return in France.
Perfect. Yeah, if I can just add in there as well. I've seen a common theme, and I don't know whether you've seen it as well, Alex, for our UK incorporated viewers today. There's a lot of transactions that are going via Shopify and being shipped into the EU. I've had a few clients come out to me and say, "Oh, it's only 1 or 2 shipments a month. A couple of sales. What should I do?" Well, the obligation still is there, unfortunately. So do watch out for how you are shipping your goods. Would it then make more sense to perhaps look to have a 3PL in Europe and have your stock in Europe as well as, or maybe just isolate your EU operation from your UK operation? Really look to what is going to make most business sense for you. You don't want to cut off trade in either jurisdiction. That's not what we are suggesting. It might be easier for in terms of fulfillment and obligation to choose to kind of emphasize on one operation than kind of crossing the two. Perfect. So if we just cover some next steps at AVASK, we always like to give our clients kind of next steps, actions to take. And as Alex said, please do reach out to your dedicated tax advisor as well if you are an AVASK client. If not, please do reach out to, there'll be an enquiries email address that'll be circulated as well. So please do reach out if you are not an existing AVASK client. So the first step, if you are based outside of the EU, register a non-union scheme in any EU member state and access the OSS filing system. Obviously, again, that is subject to your business model, should you require it. Selling on your own website, etc., triggers that obligation. If you are selling purely on an OMP, then that might not apply to you. cancel VAT registrations that no longer apply. I would err on the side of caution with this. You really want to check whether your VAT registrations do still apply in this instance. Obviously, if it's due to the breach of a distance selling threshold and you are not holding stock in that jurisdiction, then you can look to deregister that VAT number. However, if you are holding stock in a jurisdiction and you have now an obligation to register for the more simplified system, do not feel like you can deregister all of your VAT numbers and combine everything into one, because you will still have those other local obligations as well. So please do check with your tax advisor where if you still need to maintain certain VAT numbers but can deregister other ones, just to be compliant. Keep your VAT registrations where you are stocking goods. So that leads on nicely from the previous point. Do not deregister all of them. If you are still holding stock there, we want to make sure that your operations in Europe are entirely smooth, no hiccups. And ensure backdated sales have been previously declared. We alluded to it earlier, but the OSS system will give visibility on all sales. So where the OMP for some will become the deemed supplier, obviously that means that the communication between Amazon and the tax office will be increasing. We've seen that over the past couple of years anyway. The communication between the two has been on the rise, which does mean that any previously undeclared sales, they will see the activity based in each countries and possibly lead to the regular audits that we've seen being opened on clients and having that look into previous sales that might have not been declared in previous months. So do make sure that all sales have been declared, that were taxable in each of the jurisdictions. If you have any questions about whether all of your sales have been declared, again, do reach out to your dedicated tax advisor, and also check whether all sales were declared from all platforms. I know it's easy sometimes to, when you've got your finger in so many different pies, to kind of forget one platform for 1 month. So you really want to make sure that your account has been completely reconciled and all data has been given to your dedicated tax advisor, so they can make sure that your sales are 100% up to date.
So perfect. Thank you, Cambridge, for covering those next steps. So how can AVASK help your business? Obviously, there's lots of changes that are coming into place as of next Thursday, which I'm sure everyone's sort of screaming about how close it is. So how can AVASK help your business? We can ensure you get the correct representation to move your goods successfully. Whilst we transition away from Brexit and into July, this is still going to be a big point to emphasise with Brexit, with clearing those goods and making sure you have the correct representation. So we have that customs team to be able to assist you in that. Discuss your VAT requirements with your dedicated tax advisor. So I can see a lot of my clients already on this webinar today, and I know I've had conversations with a lot of them already. And where everyone's business models is so different, you do have to have those different conversations with every client you have or every business, to make sure you're providing them with the correct advice where it is so business model dependent. So having that dedicated VAT advisor at AVASK to make sure you're doing everything correctly and as easy as possible, and get a UK and EU EOI number, which is essential when selling into Europe and the UK now as a result of Brexit. So those are three of the main things AVASK can really help you with. Obviously, if you have any bespoke requirements or questions that you may not find covering those three areas, then please still reach out to us. At AVASK, we're really keen to help sellers in as many ways as we can. If it's not a service we offer, we will find a way to help you still, whether that be a partner we have who can help you, or just giving you as much information as we possibly can to ensure you can trade successfully into Europe.
Perfect. So now is the time where we are going to open for a Q&A. I know our colleague James has been typing away in the Q&A box, answering some of your questions. So hopefully we can answer a few more in the minutes that we have left on this webinar. I would like to emphasize as well, again, as we both alluded to, this is very case dependent. So yes, we will approach each question kind of from a holistic point of view, but obviously if you have bespoke situations, please do reach out to us independently, and we will be able to give you precise advice. So Alex, do you want to see whether we have any questions there? unfortunately I can't view them myself, so I'm going in blind.
Of course, no worries. I'm going to read out some of them now. I can see it as Cambridgeshire James has been typing away to a lot of you, and a lot of you have some questions going on. I think it would be good for us to bring some of them into webinars. I'm sure a lot of you have the same questions. So Cambridge, I'm going to send a question your way. So, for example, if a sale is made in Germany to a German customer using our FPA stock, will it be a 0% supply, but customers get charged at German VAT rate?
So it will depend on obviously where your incorporation country is and where your obligation lies. So obviously if you are a non-EU incorporated business and you are selling obviously on an OMP, as you've alluded to, and the sale is staying within a jurisdiction, then that will be declared on your local return. But the OMP will have the obligation there. However, obviously, if you are an EU incorporated in company, then the OMP doesn't have the obligation. It will still be declared in your local return.
Perfect, thank you. I'm going to answer Vince's question. So hi there, Vince. To clarify, can we stock in one country, e.g. Germany, then just be registered for Germany and the OSS? Again, this will depend on your business model. But if I say you are only storing goods in Germany and you are selling goods from Germany to all over Europe, say on your own website, then yes, this is absolutely fine. So you have to have the VAT number where you are holding stock. So in this case, Germany. And you are then shipping all of your items across to different European customers declared in the OSS return, then that is absolutely fine. And that would fall under that remit. So yes, that is correct. Okay, next question for Cambridge. So this is from Vibranic. I hope I'm saying that correctly. We are a US-based seller, recently registered for VAT services on Amazon through AVASK. How will the new changes affect us? Can you kindly advise if we need to process anything?
Okay, perfect. So thank you for giving the context on your country of incorporation as well. That's really important. So as a US company, obviously Amazon, if you're selling purely on Amazon, they will have the obligation on your behalf. So at this time, obviously I don't know the specifics of your business, whether you have any other kind of revenue streams based on other platforms. However, from what you've given as in basis of information in the statement, the OMP will be responsible for you. So at this moment in time, you do not have an additional obligation. That could change. And again, as I say, we don't know whether there's other revenue streams in question. If you have your own website, then obviously that does change things slightly. But based on you being a US company and selling purely on Amazon, that the additional obligation is not needed at this time.
Perfect. Yes, correct. So we've got a few more questions coming into play. So ensuring about backdating. So I was seeing a few people mention backdating on these changes. There is no backdating if these changes are effective from the 1st of July 2021. Any sales up until the end of June are declared under your current accounting method, under whether you're opting or you've reached distance selling thresholds, or you are declaring on country of departure. There won't be backdating. These sales are all, and these changes are all effective from 1st of July. So that sale you make on the 1st of July at 12:01 a.m. in the morning, that's when this switches on. So don't worry about backdating. This is all fresh effective from July 2021. One thing to take into account is that OSS filing is on a quarterly basis. So you do need to get your preparations in place, because obviously these OSS sales could affect what sales you declare in your German VAT return or your French VAT return, but your actual first OSS filing won't be until October? June, July, August, September, yeah, September, sorry. No, it is October. I can't do my months of the year. So your first OSS filing won't be until October, so you do have that time to prepare from an OSS point of view. But the changes will be effective from the 1st of July. So next question for Cambridge. Let's have quite a few coming through at the moment. This is a good question from Barbara. So if I send stock from Poland to Germany and the UK, but sometimes my goods end up for example, in a French fulfillment centre, because of the client's returns, what should I do with the VAT numbers I have? Can I get rid of them, or rather should I keep them?
So, as we've said, if you have stock in a jurisdiction, you do need to retain the VAT number. If your goods are going to a different fulfillment centre purely for the purpose of return, what I would do is I would reach out to Amazon. And if you're not, if you haven't ticked that box to hold stock in that jurisdiction, and Amazon moving goods into countries where you haven't ticked that box to hold your stock, I would recommend reaching out to them and seeing whether there's anything they can do to kind of change that channel. However, if you are holding stock, you do technically still have that obligation. That doesn't go away.
Perfect. I can see a few people asking about the OSS and the OSS and the actual differences. The most key thing to remember to establish the difference is OSS is sales going from one EU member state to another EU member state. IOSS are sales going from outside the EU into the EU. So that's why they're split off. So think about your business model. Where is the stock? If you have stock outside of Europe going into Europe, and in Europe going into a different country in Europe, then you will apply for both. So that's the best way for you to remember the difference between the two and which one you would require. Likewise, if you head to the AVASK website, we do have a sort of not quiz you can take, but a sort of quiz where you can understand if you fall under the requirements for IOSS and OSS. So you have tick boxes: where are you incorporated, what are you selling on, and it will help you find out quite quick and easy if you might fall under any of the new requirements if you are stuck as to that. Okay, I'm just going to move on to the next questions. We've got a few coming through. So we've got one from Danish, so Cambridge. If we are a UK-based company and shipping through OMP and Shopify to Europe, will you please explain about the Shopify sales and how we can record those through IOSS in France?
Of course. So it's perfect that you've defined your sales channels there. So obviously your Shopify is not an OMP, so you will be required to declare them on your IOSS return. So what that will involve is the VAT will have to be collected at the rate of the arrival country and then remitted to the tax office where you have elected your IOSS return. So in this scenario, you have said France. We will obviously, if we service your French VAT number, we'll be able to assist you on that. So please do reach out to your dedicated tax advisor and inform them of your fulfillment method, because it's really important that we start your IOSS application if we have not already done so. In terms of your kind of sales, we will then need your relevant sales data in order to declare. We have a set template of data that we will require in order to declare that. So again, reach out to your dedicated tax advisor. They'll be able to give you that template so that we can get all of the information that we need in order to declare those transactions.
Perfect. I can see a few people writing questions in the Q&A and in the chat box. If you could try and revert into the Q&A, that would be amazing to make sure we have them and we won't miss any of your questions. So I've got a few more questions coming into play. So I'm a UK seller and selling on Amazon UK. So this is from Cornell. I'd like to expand my sales and start selling only in the German market, but stock might be stored in Poland, Czech Republic, and Germany. So I would need to register for VAT in those three countries and a German EOI. What else do I need to do in terms of the new VAT OSS regulation? Well, this will depend quite a lot kind of on where your goods being shipped into, as well as where you're incorporated. Sorry, someone's question popped up and it moved away. But if you say you're a UK seller selling on Amazon UK, if you are shipping from the UK into Germany, I believe from you mentioning a German EOI number, then yes, you will need the German EOI number if you're shipping into Germany. Not just Germany EOI number, you can have an EOI number in any country in Europe. The European EOI numbers are subject to Europe, not a country. So for UK to ship into the UK, where it's not in Europe, you need a UK EOI number. For Europe, you need a European euro number. So whether that be Germany or France or whatsoever, you can still ship into any European country with that euro number. So if you are going to have stock in Poland, Czech Republic and Germany, that is correct. You will still need all of those VAT numbers. You have to have stock. You have to have a VAT number where you have stock. And then if you're going to be, from what I can suggest from your example, sending all of your goods on Amazon, I presume from you mentioning Amazon UK, then they will all be collected and remitted by the OMP where you are a non-EU entity. So you won't need OSS in that instance. So if they are just Amazon and you have got stock in Poland, Czech Republic and Germany, you just need those VAT numbers where you have stock, because you are making the sale to Amazon in country. You are not making distance sales. So it does depend on some of the things I've just mentioned, but from what you've said to me, you should just need the VAT numbers in the 3 countries you've got stock and file VAT returns there accordingly, and you will need an EU EOI number in order to get those goods into Europe in the first place. Perfect. So next question. We've got one here from Neil. So Cambridge, if you've got a question here, the sales are being made from the company's own website and on no other platforms. All stock is held in the UK. So what their requirements be there?
So if you are shipping via the UK into Europe to end customers, then you will need to have your IOSS registration to ensure that you are accounting for those sales correctly. So please do reach out to us to make sure that we are processing the application for you. But yes, that will be your requirement moving forward from the 1st of July if you are shipping in that method.
Perfect. I have a few more questions. I think we have time for a few more before we end the webinar today. If we do not able to, there's lots and lots of questions today. If we aren't able to get around to answering everyone, please please do reach out to us and we'd be more than happy to help. So we have a question here from Brandon. So you're a UK company selling on your own website. Website sales are shipped from the UK to the EU. Will you require OSS registration? You also sell on Amazon in the EU. What if I use that stock to fulfill EU sales? And how are these sales automated instead of being manually calculated? Is there a software that does this? So you've got a few different elements in there, Brandon. So it would be good if maybe you reach out to AVASK as well, but I'll try and touch on them as much as I can with the information I've got. So with regards to your website sales that are going directly from the UK to the EU, if they're under 150 euros, then you will need to charge VAT at the point of sale. So you need to make sure you have that IOSS registration and declare those sales that are under 150 euros. Over 150 euros for the sales going from UK to the EU, it will depend on who is the importer of record. If it is yourself, then you need to declare that sale accordingly. If it is your customer, then they will be charged that VAT at the border. With regards to your Amazon in the EU, if you use that stock to fulfill EU sales, with being a UK company, and if everything is on Amazon and it's already in Europe, everything should be OMP collected and remitted. So you should only need those VAT numbers and compliance where you have the stock held. So your OSS obligations shouldn't be effective from what you've told me about your Amazon sales. So you should only have those VAT numbers where you have stock and file accordingly, because all of your distance sales are declared by Amazon. So how are these sales automated instead of being manually calculated? So we've seen this change already with regards to the UK OMP collect and remit. So there is a column on your VAT transaction report that tells you whether a sale is to be declared by yourself, so the seller, or if it has been declared by Amazon, so the marketplace. So this column is available on your Amazon VAT transaction report, which tells you what sales have been collected and remitted by Amazon and what sales are to be collected and remitted by yourself. With regards to software, it does tell you on the VAT transaction report, but this is again why we recommend having a dedicated VAT advisor to make sure your calculations are done correctly. There is different scenarios for every single sale. So having that dedicated advisor who knows what sale needs to go where and what falls under what regulation is paramount. So I would really say that having a dedicated VAT advisor to file your local VAT returns, as well as an OSS VAT return from the scenario looks like what you would need, is to have that dedicated tax advisor here to be able to assist you. I think we have time for one more question. So Cambridge, if we'll go with the question from Charles. So we'll be a UK-based company with stock in Germany selling on Shopify. Is there a maximum order value which can be declared on the OSS?
So in terms of what is actually declared on the OSS, I think that would be best to clarify here. So it is cross-border B2C sales. It's all cross-border B2C sales, sorry. So that is, or if your stock is leaving Germany, so that is Germany to France, Germany to Spain, Germany to Italy. Those would all have to be declared on an OSS return if you are selling on a Shopify, which you would then need to register. If you're holding stock in Germany and you are a non-EU incorporated company, you should elect Germany under the non-union scheme to declare your OSS return in. They will then, when you pay the funds from all the sales that have been the cross-border transactions to the German tax office, they will disperse it as per your filing, which will show all of the sales to the various jurisdictions. And as per the transition to declaring tax on the arrival method, all of the funds will be sent out accordingly.
Perfect, brilliant. Okay, so I think that's sort of all the time we have for the questions today, but like we said, if you do have any more, please reach out to us. You can reach out to us directly, and this webinar will also be sent round to you via email, so please look out for that. If you already are an AVASK customer, which I know a lot of you are because I recognise a lot of your names in the attendees box, then please reach out to me directly if I am still your dedicated point of contact, or reach out to your dedicated AVASK advisor who will be able to help you likewise. We know there's a lot of changes coming into place, and we know that they can sometimes take a while for people to get their head around. Change is a difficult thing, especially when it comes to VAT, but we're here to help you and provide you with as much advice to repair your business model as possible. So do reach out to us if you have any further questions. It's been a pleasure speaking with you all today, and we hope you have a lovely rest of your day.